Good morning, trading family. Welcome back to the trading floor. Yo, market warriors, who's already feeling the weekend heat before the bell even rings. Let's wade into this tape.
Standard disclaimer, we're two traders talking markets, not telling you where to put your money. Do your own research.
Pre-market's a flat line. The S&P is down like 7 cents, the Dow down maybe a dime, futures tucked in, but that flat surface is a lie. Thursday faded. S&P dropped 15 cents on the dollar. Nasdaq gave back a third. Buyers showed up early. Sellers closed the show. The whole week's energy is coiled around one print, and the internals are screaming while the index is sleeping.
VIX at 1528, gold at 4,375.20 DAS. Those two can't agree on what tomorrow looks like. The equity tape is betting on calm. Gold's betting on chaos. That tension is the whole story.
That's the two-act macro right there. Act 1 lands Saturday with the jobs report. Act 2, the real event, lands Thursday with CPI. And between them, the Fed went silent after Warsh dropped forward guidance like a hot rock. Now, the market's buying car insurance. Let's get into it. TB, take the wheel.
So, the jobs report Saturday, consensus non-farm payrolls at 85,000, up from 57,000 last month. Private payrolls expected at 78,000, manufacturing at 4,000, unemployment holding at 4.2%. That's the headline. But the real story sits underneath. GDPN now is at 5.9%, and the Fed is suddenly not giving us a roadmap.
Warsh basically said, "We're not telling you what's next," and that's the earthquake. When the Fed stops telegraphing, the market doesn't just get skittish, it buys insurance. You saw hedging costs spike. Dollar-yen hedging premiums jumped. That's the market saying, nobody's driving the bus.
And if nobody's driving, a hot payroll print becomes bearish. Good news is bad news, because with GDP running at 5.9, a strong jobs number gives the hawks a license to hike. Cook's already signaled he's ready. Muslim wants meaningful restraint. You print above 100,000 on payrolls, and suddenly the hike talk goes from quiet to deafening. Tech bleeds, the S&P tests 768. The cold print scenario is just as ugly. That's a growth scare, and nobody wants that either. Two-sided knife.
Two-sided knife is the cleanest read. The tape's flat not because nothing's happening. It's flat because nobody knows which blade cuts first. My TFT algo is sitting in Chubb and two sleepers, being patient. My gut call account? Flat. Cash is a position this weekend.
My wave trader algo is down. Dashboard timed out this morning. So I'm running pure gut book, and the gut book is flat into the print. No trade is the trade.
Which brings me to promise versus paper. Gold at 4375.7, up 1.7%. The equity tape says peace. Gold has stopped believing. They can't both be right. Every Hormuz headline since May has said, closure is coming, and just this morning, Iran publicly threw out the idea of banning US and Israeli ships and slapping a toll on everybody else. That's not what a deal sounds like.
And the Houthis just executed their biggest escalation since 2022. Tankers actively rerouting out of the Red Sea. That's visible supply chain friction. But, and this is the counter case you have to hold, if the diplomats actually ink something, crude could drop $5 in an afternoon. De-escalation hasn't been priced out. Oil at 77.11 is not pricing a sealed straight, and it's not pricing a done deal. It's waiting, and that's the honest read.
That's exactly why I stood down on the energy trade Monday. The energy sector ETF is still a laggard, down 1.36 on the week. You can believe in the supply premium, and I do. But until the tape confirms with a green, the energy sector ETF on a green tape day, I stay flat. Monday was the right call to stand down. The trade comes back if it's real. I'm not calling the floor, just saying the bid under gold is telling us something the equities haven't priced yet.
Here, the gold bid is the tell, and it connects directly to the Warsh point. When the Fed drops its anchor, gold attracts the capital that used to live in predictable rate path trades. It's not just geopolitics. It's an insurance bid on policy instability.
All right, let's flip to earnings. This was the gauntlet. NewScale, ticker, SMR, missed revenue by 99%. 99. And the stock closed green. That is a tell. Story over substance. Pure theme trading. Late inning behavior.
The market is rewarding narrative right now, not numbers. Today's test is Vistra and Oklo pre-market. Vistra holds the artificial intelligence power trade. If Vistra cracks after utilities got dumped nearly 3% this week, that theme rolls over. If it finds a floor, the artificial intelligence infrastructure bid survives.
Beyond that, The bodies are piling up. The trade desk, ticker TTD, is back to 2018 levels. AppLovin sliding toward its worst day in a year. Datadog down 15%. Good quarter, stock crushed. SanDisk beat everything. Revenue, guidance, margins, and still fell. Palantir was the only bright spot all week. Good is not good enough anymore. You need flawless.
And that's the earnings season we're in. Beat everything, get nothing. It sharpens the risk into next week because if earnings can't carry the tape, the macro events have to. And the macro events are a knife.
Let's stay on that knife. Economic calendar this week is a two-act rhythm. TB, run it.
Okay, beyond the Saturday jobs print we already covered, non-farm payrolls, private payrolls, manufacturing, unemployment, we also get China CPI and PPI on Sunday. Consensus on China. CPI year over year is 0.8%, down from 1.0. Month over month expected at 0.2, up from negative 0.3. PPI at 3.9, down from 4.1. That's a mildly disinflationary picture, but the number that matters is CPI on Thursday, August 13th. That's the event. Core CPI prior is 2.6%, headline prior is 3.5%. A hot CPI with GDPN now at 5.9 is the nightmare cocktail. It forces the Fed's hand. A cool CPI reverses the whole two-sided knife into a rally. Watch those prints.
So jobs tells us what the economy did, CP. I tells us what the Fed does. That's exactly the two-act frame. Between them we get UK retail, Tuesday, NFIB small business optimism. Wednesday, Japan's Reuters Tankan, German, CP. Thursday, all color, but the main event is the CPI thunderclap.
Sector rotation, leaders this week, tech, ticker XLK, plus 5.46%. Consumer discretionary, XLY, up 5.08. Communication services, XLC, up 4.32. Laggards. Utilities, XLU, down 2.87. Real estate, XLRE, down 1.08. Energy, the energy sector ETF, down 1.36. That utilities dump is important because it suggests the artificial intelligence power trade is on shaky ground right before Vistra reports. If Vistra misses, that rotation becomes a rout.
And energy still can't catch a bid even with all the Hormuz noise. That tells you the tape hasn't confirmed the supply story. I'm not fading the thesis, but I'm not front-running it either.
Internationally, Asia overnight was mixed but telling. Kospi down 0.6. That's Korea still absorbing the flash crash residue we'll hit in a minute. Shanghai up 1.59, bouncing. Nikkei down 0.12, flat. Europe steady. DAX up 0.57, FTSEs up 0.2. Currency side, dollar-yen flat, the dollar index flat. Carry trade unwind risk is quiet but not extinguished. Bank of Japan's presence is still a whisper. The next macro import is China's CPI and PPI Sunday. If China disinflation deepens, it feeds the global growth scare.
And that brings us straight to the portfolio. Hot news. Korea's plumbing and the SK Hynix flash crash. This is the structure underneath the calm tape.
SK Hynix, the memory giant that feeds NVIDIA and the whole artificial intelligence hardware stack, dropped 30% pre-market on Nextrad. That's 30%. An off-hours flash crash, and we still don't know the trigger. We're not going to invent one, but the trigger almost doesn't matter. The structure does. Off-hours books were paper-thin, no market maker standing there, leverage layered on top. 20% of REX assets trace back to Korea. 65% of Asian 8's revenue is Korea. This was a liquidity trap waiting for a reason, and something found it.
The real trend started weeks earlier. Hynix was already down 15% in Seoul since late July, dragging Micron and NVIDIA with it. The flash crash is just the plumbing, amplifying a real downtrend. You got a derating happening quietly, and then the off-hour structure breaks, and suddenly it's a headline screaming 30%.
Seoul closed down 0.6. Contained enough that it didn't spill globally, but the lesson is the liquidity illusion. When you trade a name like Hynix, you think the book is deep, but at 4 a.m. Eastern, that depth vanishes. We're not trading the blip. We're watching the trend. Hynix's slide is a risk to the whole artificial intelligence memory thesis. The wave trader algo would have been watching this through the rates lens. But with the dashboard down, I'm just noting it as a macro pressure point. It touches our book because Micron and NVIDIA sit in the same supply chain, and if memory prices are rolling, that hits artificial intelligence margins.
And it's a warning for anyone running leverage in thin Asian books. That's the same playbook retail got burned by in 2021, just on a different exchange. Leverage giveth, leverage taketh.
Quick under the hood hits. Silver is lagging gold. If gold holds 4,375 Tevin silver becomes the catch-up trade. Polysilicon tariff signed, but it's a 120-day runway, so that's a December story, not today. Canada. 50% tariff deadline. Monday, Prime Minister Carney turned nasty overnight, and that's the cleanest handoff into next week.
So, we're flat into the weekend. Cash is a position. Here's what we're watching tomorrow. Number 1. Crude at 77.11. It's the supply premium barometer. If it breaks above 78 on a credible Hormuz headline, the energy trade wakes up. Number 2. S&P 768 is the break level if the jobs print runs hot. That's the line in the sand. Number 3. Gold at 4,375.70 is the trust test. If gold gives back that 1.7% surge, the insurance trade turns into a trap. Number 4. The Canada tariff deadline, Monday morning. That hands off the entire risk tone for the open.
And CP, Thursday is the real event. Everything else is just the setup.
Heat check over. Trades locked. Keep your stops sharp and your thesis sharper. We out.